Hi everyone, Elizabeth Rose here, and I'm coming to you from our new office in Coppell, which as you can see, it is not decorated yet. So hopefully next time my video comes to you, I'll have some nice little background stuff going on. But I wanted to reach out to you and let you know a couple of things and give you a quick market update of what we're seeing on the mortgage side of the world. Rates have actually cooled off just a little bit. They've been rising for like 16 weeks, I believe it is. It's been since Valentine's Day, as a matter of fact. Rates have been on the rise pretty much on a daily basis. And just over the last 3 or 4 days, they have flattened out and trading somewhat sideways and even getting just a little bit of a rally. So we've seen a slight improvement in interest rates. The reason interest rates took off in February had so much to do with what the Fed was forecasting and saying out loud in terms of inflation and their inflation fears. And it was kind of puzzling to me because they were really saying the same thing they've been saying for a long time about maintaining a 2 to 2.5%, and 2.5% is really the magical number they want, but a 2.5% reading on inflation. And we've known this for a long time, like for well over a decade. They've been trying to get inflation back to that level. It's considered a sort of normal level. And ever since the financial crisis, they've just, no matter what trick and tool they pulled out of their tool belt or tool chest, they haven't been able to make that happen. Well, now it's starting to come about. Some economists think it has to do with stimulus. Others think that stimulus actually could be deflationary. So there's two sides of the fence on that whole thought process, but we are seeing inflation creep up right now. What's going to happen when we have another stimulus package come out, which, it's coming soon, we don't know. But the reason the interest rate sort of flattened out, settled down the last few days is because thankfully, finally, Fed Chair Powell put minds at ease about rising inflation, that it was not going to rise rapidly, that we may see a spike. We expect to see a spike in the spring and early summer months as the economy returns. And of course, we're seeing oil prices go up. Can watch that every day when you drive by the gas station. So prices are going up, and then as more and more consumers are getting back to work, we've got more and more production, we've got more manufacturing, we've got more transportation, shipping goods to stores and all that. So it could drive inflation is what he's saying, and then the economy will get back to some level playing field. For whatever reason, this made traders feel a little bit more comfortable with things. And so we've seen less pressure on the upward movement of rates. So that was sort of a long way around getting to the line of rates are pretty stable right now and looking nice. Granted, they've been looking nice for a long time, right? So I have some other information I want to share with you. Got too many screens here on my desk, but Fannie Mae came out with a report just recently in the last week or so showing that consumer confidence is at an all-time high. And this was, I guess, a little bit of a surprise, but the reason being is because businesses are opening back up, more and more people are getting vaccinations, more vaccinations are available, so people's fear factor is much more reduced than it has been. Let's see, what else do I want to share with you? Housing bubble. I keep hearing about this, and I'm guessing that you're hearing about it too, as people are trying to decide, do I buy now or do I sell and buy? And certainly first-time home buyers, is this good time to buy? And mom and dad said that, we're going to have a housing bubble. And I would say to that question, no. And I think what's happening is so many people are comparing this to 2007, and you can't compare these two markets. They are absolutely nothing alike. In 2007, we have what I call a manufactured market. We had zero down loans. You didn't have to have a job or an income or anything to qualify. I mean, you just had to have a pulse and be able to sign your name. And there was a lot of fraud going on. We had, unfortunately, we had realtors and mortgage people and title people and appraisers all in cahoots with each other to manufacture inflated prices and pass those on, to the consumer, and then the consumer's going belly up. The house, value isn't there. And then you convolute that with what was going on in the financial sector, not just mortgage companies. It was mortgage companies was just the tipping point. But you had hedge funds, and you had the derivatives that were coming from this, and the like the AIGs of the world that were doing the insurance for all these, they call them SUVs. So and it's not a vehicle, it's not a car, but it's a financial product. But what they were doing is they were leveraging to a very high degree, and all that started collapsing, and it just collapsed. And it came down to the consumer level, it came down to the property values. We have so much now in the infrastructure of the financial system to prevent a meltdown like that again. And not only that, people have to qualify for loans. They have to have a job. We pull their tax returns to make sure there's no fraud. There's so many checks and balances that take place now. So I don't see a collapse of the market. I also don't see a big foreclosure challenge, especially in Texas, even in spite of COVID and the forbearance that's going on. Will we have some? That's possible, but I really think houses sell so fast and the inventory is so slight that who needs to have a foreclosure? Just sell really quick. So that's my personal feeling on that. But to get back to the housing bubble, home prices still have room to appreciate before we need to have any concern about a bubble. And then the other thing you always have to think about is the demand. As long as there's demand, people will buy houses. And granted, home prices can't be on a runaway train, but still, you've got so many people that are entering the home buying market for the first time ever in years 2021, 22, and 23. And why do I say this? It's all about the birth rate. We go back 31, 32 years and we look at the birth numbers. More babies born in that 3-year period, or each year of that 3-year period, than ever before, ever in history. So we have more people aging into the home buying market. So the demand is going to be there. The people are going to be there. We know jobs are coming to Texas continually. Our communities are growing like crazy, and all people need a place to live. So I don't see a bubble coming. I think prices, it's kind of crummy. If you're buying, that prices keep going up. But I think we're going to still see some continued appreciation. Last year's forecast was for like 4.2%, and it came in at 10.5%, I believe it was that was for the nation. This year, different forecasters are coming in with different brackets. I've seen everywhere from, I think, 9-something% down to a very modest 3%, and that was, I believe, CoreLogic. But even still, home prices are going to continue to appreciate. So anyway, this is a really long, fast video to give you a quick overview of the market. I am going to start doing this monthly. I'm actually going to do it live on a Zoom call starting in May. I can't believe we're in April already. I'm shooting I'm thinking the first Tuesday of each month, because I think that's when people have finally kind of like decompressed and they have a little bit of time to participate. I want to keep it to 15 minutes and open it up for Q&A and all that. So I hope you'll join me. So look for some information about that to come. And then finally, one other note, I am hosting a live watch party at my office next week on Wednesday for realtors. It is the Modern Real Estate Summit. There are an incredible lineup of speakers. Ryan Serhant, and I probably botch his last name every time, but out of New York, the mega top producer guy, he's going to be there, as well as other industry well-known people who are highly successful. They're going to be talking about so much stuff. I mean, I think it's Veronica Figueroa. She's going to open up her playbook. They're going to talk virtual. They're going to talk branding. They're going to talk masterminds and video and social media and everything that you need to be fully equipped to be operating in this new modern world that we're in. You know, it's constantly changing. And to be not just to survive, but to thrive and to build and to grow. And that's another thing we're going to talk about is team building. So if you would like to join me, I have limited space, but I would love to have you here. I know I can comfortably house 15 people. I can probably bump it to 20. I've got some seats already committed for, but you are more than welcome. So please reach out and let me know if you'd like to be a part of this. We're going to start off at 9:45 in the morning. The event kicks off at 10, but at 9:45 or 9:30, you could come in, get settled. I'm going to bring maybe some of my operations and underwriting people in to just say hi, and so you can see that they're real people and they're not just some crazy lunatic hiding behind a computer that wants to wreak havoc, because we actually like to close loans here and we're pretty darn good at it. So anyway, I hope you'll join me. Once again, the event is next week on Wednesday, April 21st. If you could be here like at 9:30, 9:45, but I do need an RSVP. I need to know you're coming so I can save your seat. It's going to be a special event, and I think it's going to be so full of content that it's going to blow your mind. It's going to be wildly successful and exciting. So hope you can join me. And mark your calendars or at least just keep an eye out for future emails from me about the monthly market update, and we'll turn it into like a Q&A chat session so we can actually share information back and forth. Hope you're having a great day. Thanks for listening, and I look forward to hearing from you soon.